Hello, it's Big Chuds, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. You can find me on Twitter at Big Chuds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the Diamond Top. Diamond Top is a bearish reversal, and of course, to reverse something, you need to have a trend. Now, of course, you can pause and read this on your own, the key characteristics and how to trade it. I have a little bit of a disagreement of how to trade this according to what you're going to read in some of the textbooks or in that AI overview. But the idea here is you have ideally a mature trend. You can't really reverse something sideways or a small move up, but ideally it's a mature trend. And what happens is you start to see an expansion in volatility on the left side. This is really just a symmetrical triangle, but it's pointed, the open part to the right. So it's two symmetrical triangles, another one on the other side, connecting it. And you have the volatility expansion and then the volatility contraction. And if you think about the concept of momentum, you normally look for big volatility. You look for big high wave candles, long upper shadows, those types of things to represent a trend turning around. And when you see something like this, that's the idea behind the diamond. Is you have a trend, the trend has encountered some volatility, and then that volatility slows back down to an apex, to a decision point, but it really shows that the trend has changed. You've had a big battle that has happened. You were going up, now you're going sideways. As you see here, it gives you a measured move. Now, sure, a measured move is fine based on the height of the triangle, but you want to keep in mind what the obstacles are, what the price structure is on the way to the measured move. Here, it talks about playing it on a simple break of the diagonal. What I like to do when I play a diamond top is rather than working off just a diagonal, what I like to do, here's our diamond forming, and then our diamond coming back down. So we have our diamond. So it talks about you can just take a break on a loss of the diagonal here. For me, that's a little bit premature. This pattern can morph into a rectangle or some other type of pattern. What I'd like to do is be on watch with the diamond forming, and then I look for the lows of the pattern to be swept. Now, of course, you're not going to get the full measured move that you might get if you do it that way, but you actually have a better way to manage your risk. You can defend your risk by saying, I'm short because the price lost these lows. And you can have a stop loss just above and say, okay, my idea is valid as long as the price doesn't recapture that level. So the idea, again, mature trend, expansion volatility, contraction volatility. The momentum story has changed. The trend has slowed down, getting ready to roll over. And you can use a break of the diagonal trend, or you can use the low, which I like to use. You see how the price paused here? Then a break of this low would be a very, very nice sell signal. This is how I play the diamond top pattern, and this is for the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. Find me on Twitter at Big Chuds and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Chuds out.